The biggest risk to the American economy was never the AI bubble. It wasn't the shadow of a recession. It wasn't the geopolitical tension with China. And it certainly wasn't the political theater in the Oval Office. It is something much more boring, and that is exactly why you've never heard about it. It's the kind of story that stays hidden deep within the finance rabbit hole. But if you've been wondering why mortgage rates refuse to fall, why stocks randomly panic every few months, and why the Federal Reserve talks about cutting rates while financial conditions in the USA still feel like they're being strangled, the answer does not start in Washington. It starts in Tokyo. It starts with the most boring, unsexy asset on Earth, Japanese government bonds. For 3 decades, the country best known for its culture has also been the duct tape quietly holding the entire global banking and money system together. But that duct tape is starting to peel. To understand why Japan is the secret engine of global finance, we have to rewind to 1992. Japan's massive asset bubble burst, triggering the lost decades. For 30 years, there was no growth, no inflation, and no wage expansion. It was like the economy hit the pause button and nobody could find the remote. The Bank of Japan did what central bankers do when they are out of options. They dropped rates to zero. Then they went below zero. They introduced yield curve control, which effectively superglued interest rates to the floor. But for Japanese banks, life insurers, and pension funds, this was a catastrophe. If your home country pays you 0%, you have no choice but to go shopping overseas. And so, Japan went on a multi-decade global shopping spree. They became the largest foreign holder of USA treasuries, one of the largest buyers of USA mortgage-backed securities, and the world's largest net creditor nation. Japan became the world's ATM for money. This brings us to the yen carry trade. Here's how the money actually moves. Imagine an investor, let's call him Bob. Bob borrows billions in yen at near 0% interest rates. He converts that yen into dollars and buys USA treasuries that yield 4%. After the fees and hedging costs, he pockets the spread. That is pure risk-free finance profit. At its peak, this trade was estimated by major global banks to be worth trillions of dollars. It was like the global markets were running on Japanese Wi-Fi. But it wasn't just treasuries. This cheap, endless supply of money flooded into tech stocks, real estate, and emerging markets. Basically, if it had a pulse and yielded more than 0%, it was bought with Japanese cash. It was the ultimate leverage machine fueling the American lifestyle and the USA stock market. But this entire house of cards relied on one single fragile assumption that Japanese yields would stay at 0% forever. In 2024, that assumption was shattered. The Bank of Japan ended its yield curve control and raised interest rates for the first time in 17 years. Then they did it again. Immediately, the S&P 500 dropped and the Nikkei 225 suffered its worst crash since 1987. It was a massive neon-lit signal that the markets were officially spooked. Because when Japanese yields rise, 2 things happen that break the finance model. First, borrowing in yen becomes expensive. Second, hedging the currency risk against the USA dollar becomes a nightmare. Suddenly, the free money trade isn't so free anymore, and this is the beginning of the end. The math has flipped, and the trade is no longer a no-brainer. This leads us to repatriation. The money that flowed out of Japan for decades to support the USA and global markets is now starting to flow back home. This is the biggest, most overlooked threat in global finance today. The global ATM is closing. The duct tape is failing. And as that liquidity disappears, the American markets are forced to deal with a reality they haven't faced in 30 years, a world where capital is no longer free. The question isn't whether this is happening, it's how much more duct tape is left before the system is forced into a total reset. This isn't just about bonds, it's about the fundamental way money moves through our global banking system. If you want to stay ahead of these structural shifts in finance that will define the future of America and your personal wealth, make sure you are subscribed to Money Speaks. We tell the stories the mainstream media is too afraid to touch. Leave a comment below. Do you think the global banks can keep this illusion going, or is the era of cheap money officially dead?